Hello friends, welcome back. Today I'm going to give you another strategy using some indicators for your swing trading or also for investment purpose where you want to find low or whenever the market hits the bottom you will be able to find out what is the bottom, where is the bottom, so that you can invest more onto your investment portfolios. So things today we are going to discuss are called MACD or MACD, which is called moving average convergence and divergence. So this topic, it has a multiple strategies. MACD people use in a different ways, but I'm going to cover a few strategies using MACD. After looking at this video, I'm damn sure merging with our previous whatever the thing we discussed, when you merge all this together, you can take a very good swing trade, or you can do a very good technical analysis of a chart to add more investment to your portfolio. And this is Sundar and you are watching Mindful Finance. Okay, let's deep dive into this MACD. See, this video may be a lengthy because I'm going to cover multiple strategies. So this surely will take more than the normal time, but don't skip it. Watch it completely, understand the concept of MACD, how it works and what are those strategies, so that you can apply practically and take a trade, and you can do it in a very confident way. I can guarantee you that. So let's get into that. So let me explain to you first what is this MACD is all about. MACD means MACD. MACD means moving average convergence divergence. We have covered this topic multiple times in a different way, like EMA, what is divergence, right? This video will refer all those things what we discussed in the past. So please, if you don't have idea about what is divergence, go back and watch my previous videos so that you will understand what is divergence, because that is very important. Anyway, I'll cover that in this topic in this video also, but better to watch the previous videos so that you get more idea about this one. So let's get into this one. If you see, I'm using TradingView for you guys. You can use TradingView or Zerodha, whatever it is, but few indicators may not be available in Zerodha, so here it will be available. So click on the indicator, go and search for MACD. You'll find moving average convergence divergence. So you pick that one, so that will be coming over here. So this is that what moving MACD is all about. So this particular area you see is MACD. So basically MACD will have two lines, the blue line, the orange line and the bars. Okay, the blue line is called so normally the blue line is called a signal line. Okay, and what these two lines does is like EMA, which is like 9 EMA and 26 EMA. If you see here in the chart, you can see the green line is my 9 EMA and the red one is 26 EMA. You can see this blue line and the orange line also follows the similar pattern, right? So people will take a trade based on the EMAs. So if in this case, like if you using the EMA, if you see the EMA, the red and the blue, green, right? This crossover happens here, but actual crossover happens in the MACD is here. So signal, you get the signal over here. So this is what signal, when the blue line crosses the red line, right? This is a signal. The same thing is happening, but it is happening after a long time. It almost like you lost you would have missed the trade, right? So that is the speciality of this one. And these bars are like giving the idea about the momentum of the trend. If it is the high momentum, if you see when it's going up and up, the green bars are dark green, and when it's a sideways or is slowing down the momentum, then the bars color will be reduced to lighter green. Similarly, when in the downtrend, when the red candles are forming, the bars are very dark red, and when it goes in the sideways, the red gets lighter. So this is the concept of this is called histogram. The bars are called histogram. So this is what we are going to use and identify our trends and strategies. In the normal scenario, using the MACD, how people take a trade is, whenever the signal line, the blue crosses the red line, people tend to sell it. And similarly, whenever at the bottom, when it try to cross in the bottom, like the blue crosses the red over here, people buy for it. They go for long. So this is the normal way people use the MACD. And divergence also you can find out using this one. I'll tell you how the divergence works, but this is the basic way of taking the trade. Now we are going to have different strategies. The first strategy is our MACD and Ichimoku cloud. Combining these two, we are going to check how to take a trade. In my previous video of using super trend also, I have informed about how to use Ichimoku, super trend plus Ichimoku. The similar way MACD and Ichimoku, how will it? So in Ichimoku, in indicator, go and find out, search for Ichimoku, you will find Ichimoku cloud and you will get this one. Okay, and when you get this, you will get a default, everything is checked, so that will be very complicated. So uncheck all those things, only have the background part. Okay, we just need this cloud, we don't want anything else. Okay, and this is our MACD. Okay, now we discussed earlier also, this is kind of a support and resistance. The cloud acts like a support and resistance. Whenever you want to take a long position, the cloud has to be bottom of your trend, your candles. If you are going short, if you are going to sell, or if you are going to take a position in the short, then the cloud has to be above your candles. Okay, above your trends. That is how you have to make a decisions. Now similarly, see, in the normal scenario, if you take a trade just by thinking the crossover, this blue is a signal, right? This is our buying signal. If you just follow, sometime it works, sometime it might be a sideways, and you will have to get multiple indications and you will end up in losing your money. For example, I'll show you. If you buy here, this area, because it's a crossover, this is a buy zone. It goes up very little bit, it goes and then it falls, right? Again, another here in this area, it is crossing over, you can see, but if we enter here, it comes immediately downwards. So you'll get a lot of wrong signal. So that is why we have to mix both this thing. So how do we do this one? What you have to make sure is it has to cross, but if you are going for a long position, if you are going to buy position, when it cross, look for these candles are above your Ichimoku cloud. Whenever it is above the Ichimoku cloud, then you can take a buy signal. So now it has crossed over here, you can buy here, but as per our strategy, we need to wait till it goes above the cloud. Okay, so then you can take a trade around here. If you enter here, you can have a very good ride. Okay, because it's still not crossing your hitting the cloud, it's still going on. You can keep continuing your trade position, and whenever it hits the cloud, you can exit. And similarly, the crossover, you can see it crosses over here, crosses over the zero line, right? Then you can exit. Still, actually, it is in a trend, because still it is not gone down, but for safer bet, you can exit. And as I mentioned earlier, you can go with our exit strategy, plus you can keep moving your stop loss a bit above. Okay, so that you can, it's called trailing stop loss. You can trail the stop loss so that you don't lose your money. So this is our first strategy. Similarly, for if you want to downwards, see, there's a crossover here. If you take a trade, you want to take a trade here. After this crossing the cloud, you have to take a trade. But again, it just comes over here, right? Only 3 candles, and then it goes up. So that you have to take a so another logic is, whenever you feel that the colors are fading away, right, that time also you can exit your trade. So previously here, even though it's a long trade, right, we entered here, it is going up and up, so the colors are changing here, but when the crossover happens, there is a red, so you can exit here, this area, right? Obviously you can exit this area. So obviously you can exit this area because there's a crossover here, it's crossing down, so you can exit the trade here. And again, since it's above the cloud, okay, when you see this kind of a pattern, see, this is a morning star, you can take a trade, and you can put a 1:1 ratio and you can enter the trade. And see, this is a sideways. Now you see this is going up and down, and this signal gives a very confused one, right? You can also exit the trade here. And again, when you see this one, there's a crossover here, proper crossover. It is actually like opening, like whenever it, like when the two things are open like this, you can take a positive trade. You see how it goes, and again still it is going. Here is the crossover. When it's crossover, you can exit from this one. So this is the normal trade with the Ichimoku cloud. Okay, next, what the strategy we are going to take is using MACD and a concept called 3 ribbon EMA. Okay, go to indicators and search for ribbon. You'll find moving average ribbon. When you click on that, you'll get this 3 moving average one. you have to modify it. Go here and change your input to one is high. All are 200 EMAs. Okay, one is high, one is low, and one is close. You just need 3. Okay, you don't need a 4th one. You can disable it. So you just need this 3 EMA: high, low, and close. The high of the candle, low of the candle, and close of the candle. Okay, this is the concept of this EMA. So using this, it creates this pattern. Okay, the logic here is whenever it certain things goes in a trend, this trend will pull the trend into this ribbon, this EMA ribbon, and sometimes it will continue the pattern, continue the trend, or else it again there's a chance that reverse from that ribbon. Okay, there are two chances. When it's in a proper downtrend, you just follow the downtrend and make a decision of going in the selling side, and when it's in uptrend, always find the option to find a buying side. So here, as an example of stock, I have taken a stock of Stockcraft. Okay, if you see here, it was clearly from here it is in a downtrend, right? See, the MACD is in downtrend. Okay, it's completely in downtrend. Whenever it crosses this ribbon and MACD is open like this in the downside, you can take a trade here. You can enter here. Okay, and stay with the trade. Okay, and whatever the ratio you have, you book the book your target and you can exit it. Okay, again, see, this will pull to the ribbon here. Always this will pull. So now when it pull back, there's a chance it may break out, or again it will continue the pattern. If you see, even though there's a in MACD there's a it's above the thing, it is going up and catching the ribbon here in this area. It is going up. Okay, but it didn't close above the one candle. After that, you have to continue. You need to have another candle to continue in the give a breakout, but it is not happening. It is coming down. Okay, but it is above the zero line, so we cannot take the trade confidently. So even though it is a crossing, but we need to wait, cross this to cross the ribbon. See, it has to cross the ribbon and need to be below the zero, and it has to open like this, and you need to have 2 candles. Okay, see here, this is you cannot take because it's above zero. This you can see, but there is no, this is a green candle now, so there is no 2 candles are there. Here still it is not zero. Here it is zero. You can see 2 candles are there, right? 2 candles are, you might end up in taking this trade for sure. This is right, you may end up in taking a trade here. You'll enter here, but this will hit your stop loss because next is a green candle. So what to do now? What shall you do for this kind of a scenario? How to take a decision here? Okay, the decision how to make is, that is called divergence, convergent divergence, right? The MACD helps you in that scenario. What is happening is, if you see, this is making lower low, but MACD histogram is making higher low. So this is a divergence. I have explained this in our multiple hour video. To find a reversal, you have to follow divergence. So in the earlier divergence, I shown you through RSI, right? This is showing MACD. MACD, there's a divergence here. So you have to be very cautious here. So you cannot take a trade because this is not a correct momentum. Okay, you should not take the trade. Okay, it is pulled again, but still it is not gone up. See, MACD is going down only, right? And now it is coming down. Okay, again, see, this is making higher low, but this is making lower low. So still we are not going to enter the trade here. Okay, still we didn't enter the trade at this point of. Now this one, this low and this low, and see the similar way from here to here. It is making proper directions. It is giving you proper, here also making lower low, here also making lower low. Now you can take a trade. When you have to take a trade, when you get the confirmation, this particular area, this made a low. After this green candle, you saw another candle, right? You have to take a trade here. You have to enter here. This is your short position, okay? And your stop loss is to the first ribbon here. And yeah, this is 2.73. If you want to enter 1:1 or 1:1 this kind of a thing, you can go for a long, okay? Still you see a crossover here, this crossover. Okay, this crossover, when this crossover happens, already we achieved 1:2 ratio. 1:2 we have already reached here, right? So it's a good trade. Already we reached 1:2, so you can exit. So it's a good position. If you see it's almost 10%. I'm not sure Stockcraft is traded in options, but so I'm just giving an example, okay? But for the investors, let's see what is happening now, because we need to take a buy position, right? So what is happening here? Can I take the trade here? It has broken. It's a very good green candle. Can I enter here? It's open, right? Highly open here. But what is happening here? It is making higher high, but it is making lower high. So this is not a signal to buy here. You should not buy here. Okay, next what is happening? Can I buy here? But it is going downwards. MACD is going downwards. So you cannot buy here. So where to buy now? Or whether I am getting a sell signal here. It is crossing down here, but ribbon is still here. It is touching the ribbon here. But again, if you see lower low, this is making lower low, but indicators making histogram is making higher low. So this is again, you cannot take a sell signal. It's not a sell sign. It's actually a reversal sign. This is a divergence for reversal, for to go upwards. But still it is going in the ribbon. Okay, let's see here what to do here. Can I take the because this is going down here. Can I take this one? Because this is making lower low. This is making lower low for, right? And here it is making lower low. So can I take a sell here? No, because the MACD is opening like this. So you cannot take this trade. Okay, boss. When I will take a buy side of it, or sell side, when I take a confident sell side of it, here can I take? No, this is above the zero line. You cannot take it. Can I take here? It crossed the ribbon here in the second candle, right? Can I take the trade here? Because this is higher high, but how about lower low? So this is not. So this is lower low. This is a good sign for entering the short position. So you can enter here, but you will get a very less target here, because the middle of the ribbon, if you take, you enter here. 1:1 is something here. Yeah, 1:2. Yeah, here. This is also a good trade, but you can still continue because it's still opened. But when you see here, this is a divergence. But before itself, you should have exited here, because there's a big green candle, and it was so it is beyond your target, right? You should have exited here. Your target. See, don't be greedy in the trading side, because it's a short position. So don't be greedy. Better to be in. Just have entry exit criteria and do a disciplined way. Okay, don't be greedy. That is the point. Now, okay, all fine. Now what to do? Now if you see all making higher high, histogram is making higher high, right? It is going above this one, and this is the candle now. Okay, see, higher high. So now I can enter a long position here. Okay, this is my stop loss. What is the target here? If I say 1:2, at least it will go till this line. At least 627 it will reach for now in the short term. Okay, so investors can focus on this one beyond this trading strategy. Okay, this is MACD and the EMA ribbon. Next strategy is MACD and Bollinger Band. What you have to do is go to indicator, search for Bollinger Band, not strategy. You have to pick Bollinger Band here. When you pick this, you'll get a Bollinger Band. In that, you have to go and configure it. So right now I have set 50 as thing. If you are going for a long-term investors or kind of a thing, you can go for 200. But if you want to go short-term trades, you can have 50. And standard deviation is 2. So this is like 50 EMA based band. Let me explain what is Bollinger Band. Most of the time, these candles will be between these bands. And whenever it moves out of this bands, it will always tries to come inside the band. That is the logic here. So let's see, take an example here. Here, if you see, it is going away from the Bollinger Band. What is happening here? It is above the zero line. It is a good signal to buy. See, this is a trending uptrend one. So you have to always focus for buying side, right? When it's uptrend, you have to focus for buying side. So if it goes up above this line, it is a like going market trend is up, and you have to focus on buy side. Whenever the trend is downwards, it will always focus to break the downward side, and it will go inside, downward side, inside, right? This is a what will happen if it's a continuous downtrend. See, this was the COVID fall. See, it is continuously on the outside your band, but it entered here, right? When it entered, it entered here. So always you can take a trade whenever it entered in this candle. Okay, you can buy here. It went down, that is for sure, but your stop loss is here, right? You would have taken a trade which is you entered here, and your stop loss is here. Okay, if I say 1:2, okay, it achieved here. So it reached the 1:2 ratio, right? So similarly, you have to compare this both MACD and the Bollinger Band together. Let's see, this is going on the sideways, right? It is on the side of the Bollinger Band. What should I do in this case? Okay, when to buy or when to sell here? It went out, and it is coming down. Okay, so here, can I take a sell trade here? Can I take a sell? No. Whenever the band crosses from bottom to top, that is where my buy signal is always, right? So this is, we are seeing in 1-day chart. See, it came down here, right? See the MACD, it crossed here, right? Now it is entering it. MACD is fading out. So you can take a long position here. It's a gap up, so you would have missed this one. So you would have entered here, assume that you entered here. But as per the target, this is the entry point, but since it's a gap up, you would have entered the next day here. But stop loss is here. It's a good trade, right? So it's a good trade. You pick the momentum. So this is used for the momentum trade basically. This combination works better for momentum trade. Buying options buying works better here. Okay. And similarly came down. I'm not going to, because the trend is uptrend. I will not go short here. Whenever it crosses the downside, so it is crossing the down, it is going up. So here I will try to go for a short position. Okay, I'll go for a short position, but not here. I will go here because it has to give me a direction, like it goes up and it comes to the bottom here. It goes through this channel. So but it's mostly our Nifty is always in uptrend now. See, it's going up and down. So now you can, this is a trend, like it is making a lower high, right? See, here it is higher high, it's a lower high. That means trend is downtrend. So I can take a short position here, and this is my stop loss. Yes, achieve the target, right? So similarly, you can take a trade. Let's see now current scenario how our Nifty is. Okay, it is out of the frame now, but trend is upward. Okay, and we should have taken a trade here or there, but it's already going uptrend. It is already up. So you should have taken a trade here, and this is my stop loss. Okay, as per this, Nifty can go till 24,609. Okay, but let's see any divergence before that. Yeah, can you see high, low? Yeah, this is how you have to decide. That's a divergence here, so it may come down. Okay, a bit it may come down, but this is not the right time to take a trade. That is for sure. Okay, let's wait and see what it happens. But this is not the right time to take a trade for sure. It is not giving a bullish sign here. Okay, so this is another strategy. The next one is combining all this Bollinger Band, MACD, EMAs, we can merge all and make a trade. But now just with the MACD, we saw a strategy, right? MACD and divergence, this both how to take a trade. We'll discuss that. Okay, so we saw some divergence over here, right? Whenever we saw, let's see, where was the reversal? Let me get an indicator. Okay. So this is our Bollinger Band. So here, this is lower low. Perfect. There is no divergence here. So now, so this is a lower low and it is going up now. It is going up, right? Now, I should take a trade above the zero. Okay. So before that, let's go into 1 hour candle. Let's go to 1 hour candle here. Look at here. Let's take this example. This is making lower low, but here making higher low. This is lower low. Okay. So there is no divergence. But here there was a divergence, but it didn't work. Okay, it has recovered. Okay, here let's see this one. This area is good. There is a divergence, but it is. So now how you have to enter is, you look at the histogram above this one. Okay, in between there is a green candle is there, right? Green histogram. So mark a horizontal over here. Okay, mark a horizontal line over here. Whenever your MACD whenever your candle crosses this histogram area, this height, so that means this height, right? This area you can take a trade, which is this one. You can enter here. This is your stop loss. You can enter here, market 1:2. Yes, done. So this is how you can use the histogram divergence and taking a trade. Let's see another one. Okay. Okay, this is higher high. It is making higher high, right? It is making higher high, but here it is lower high. So it's a divergence. Okay, now you have to draw a line here. Whenever it comes down, okay, it crosses this histogram, then you can go short. Okay, don't go short here because you will get failed. So this is the area you cannot short it. Okay, we have to wait till this height crosses, that is this area. You see this one. So you have to take a trade at this one. So this is your stop loss 2.6 1:2. Yes, done. This trade is done. So this is how you can use MACD and the divergence and the crossovers. Hope you understood the concept of using MACD here. This is how you can use the MACD for your trading. I have used for a daily candle. You can use for 1 hour candle or 5-minute candle or 15-minute candle. It's up to you. Okay, that you can try and you can work it out. This will surely help you to take a very best and better trade. If you like this video, please like it and share it with your friends. And don't forget to subscribe this channel and don't forget to press the notification icon so that you will not miss my video. Thank you.